So Bank of America warns that the U.S. economy will begin to lose 175,000 jobs per month in the first quarter of 2023 and expects a harder landing rather than a softer one. And the U.S. is sending tanks to Ukraine. More on that in just a moment, while we see the debt limit ceiling crisis and how it could impact and hit your 401k, Social Security, and Medicare. Most importantly here, 5 REITs with the highest paying dividends and how to supercharge your portfolio, while Bill Gates is asked and supposedly answers the question to why he's buying so much U.S. farmland. We want to know. Also, check this out. Microsoft founder and billionaire turned philanthropist Bill Gates says that he owns some 80% of all U.S. farmland, and this Ask Me Anything session AMA on Reddit. Now, it says here that Bill Gates was asked, why are you buying up so much farmland? Do you think this is a problem with billionaire wealth and how you can disproportionately acquire? And his answer was pretty clear, pretty simple. I have invested in these farms to make them more productive and create more jobs. There isn't some grand scheme involved. In fact, all these decisions are made by a professional investment team. So it says here that while Gates has spent billions investing in farm properties to make them more productive, new companies have innovated ways for the retail investor to earn passive income in the real estate market. And here's how to invest as little as $100 or more, depending on your appetite, in a rental property to earn passive income and build long-term wealth. Bill Gates, last year, his conspiracy theorist claims that the Microsoft founder was buying up farmland in the U.S. in order to starve off Americans for an unknown reason. And after researchers said in April that the world was facing a potential food shortage as a result of Russia's invasion of the Ukraine. And according to a 2022 report from the U.S. Department of Agriculture and the National Agricultural Statistics Service, there are over 895 million acres of farmland in the U.S., and Gates owns roughly 242,000 of those, which amounts to about 0.3% of the total. To put it in perspective, if all of Gates's land was in one place, it would cover about 25% of the state of Rhode Island. Now, folks, this is important because high egg prices have Arizonans buying chickens. And here's what to know before you start, because I know a lot of folks out there are looking at this as a potential option to hedge against the rising inflated cost and higher prices of the egg problem at grocery stores. Now, it says that the memes and TikTok videos are flowing on social media, poking fun at the rise in cost of eggs, but for many cash-strapped families, the added expense isn't funny. Increasingly, as one local vendor noticed, some are taking matters into their own hands. Surrounded by construction and old buildings in the middle of downtown Mesa is Inspire Farms, which is a shop that sells everything from chicken feed to raw, locally produced milk. Store owner Tiffany Lilly has seen an uptick in sales for her chicks and chicken coop startup kits, and before it took her 3 days to sell out of her chicks, now it takes an hour, according to the owner. She saw the demand begun at the height of the pandemic, but during the past 3 months, she's had more customers come in and ask how to get started. And she's getting 100 to 300 chicks in her store every week, and she sells each and every one of them. Customers even pre-order the chicks on her store website. While egg prices have more than doubled over the last year, largely due to an outbreak of the bird flu in commercial poultry facilities, everybody wants a silky chicken. And she said that partially because of their popularity and cuteness. Now, silkies are known for their fluffy white or yellow feathers and funny looking faces, but the downside is that they don't lay nearly as many eggs as other breeds do. And a white and black average looking Delaware chicken can lay up to 260 large eggs a year, while a silkie produces only about 100 small eggs annually. And if people want pretty eggs, she suggests getting a boring looking chicken. Nothing fancy. Not that the color of the egg makes much difference in taste anyway, but the taste difference comes from what the chicken actually eats. The better you feed your chicken, the better the egg. And this is according to the store owner. And that's why at her store, she sells soy and corn-free chicken feed to ensure her chickens get sufficient minerals and nutrients and vitamins. Now, apart from being egg producers, Lily said that they can be great pets. Chickens can recognize up to 100 faces and are easy to train. On top of the companionship, they're good pest control because they'll eat any of the bugs in the backyard. And Lily also says that more than one chick is needed to start off, as chicks are social animals. And if they don't have friends, then the chickens don't do as well and won't be good egg producers. Happy hens lay more eggs, she says. So she recommends beginners start off with 4 or 5 chicks. And once the chicks are fully feathered after about 4 to 6 weeks, Lily said it's important to get them into their backyard chicken coop. And there are options on the type of chicken coop people might want to park in their backyards, assuming that you have the space for it. Now, Lily said people could build one, buy one online, such as off of Wayfair, or go for the one she sells. Her Amish-built small chicken coop houses up to 5 chickens at a cost of roughly $1,300. Now, she said her coops are built to last and endure Arizona's harsh summer weather. Now, it could cost upwards of $1,500 to start this endeavor, and Lily pointed out that a lot of that is one-time costs. The main reoccurring cost will be the chicken feed, which a 60-pound bag could last 6 weeks for 4 chickens. Patience will be key when starting this journey, as it takes 4 to 6 months before a chicken lays its first egg. And the first 2 years are a chicken's best laying years, or best egg laying years. Now, Lily said that once chickens get older, they start to slow down, but the upside is the size of their eggs get larger as well. With 4 good egg laying chickens, folks could expect an average of 20 eggs a week. That amounts to 86 dozen eggs a year. Based on the average price of a dozen eggs, that would amount to $365.50 a year in value. However, prices range depending on the brand and size of the egg. So that means that if you go for the top line Amish coop, it could take 4 years for your chicken investment to pencil out. The average lifespan of chickens is around 2 years, but they can live up to 10 if well taken care of. Disease and predators are chickens' main cause of death. Noting that backyard chicken eggs have stronger shells, darker yolks, and better taste, according to the store owner, Lily. And eggs also have a longer shelf life because private coops are not processed and cleaned like commercial poultry facilities. So important things to take into consideration and keep in mind if you're trying to find ways to mitigate costs and overcome this inflation, this high inflation, and this economic recession that we're in by offsetting your chicken egg cost prices by getting your own chickens, having your own coop, providing feed, and producing your own eggs. Now, it says here that Bank of America has warned that the U.S. economy will begin to lose 175,000 jobs per month in the first quarter of 2023. And experts expect a harder landing rather than a softer one. Most importantly, here's why. And we've already seen the consequences of some of these companies introducing these layoffs already, and likely to see more coming in the near future. So it says here that the latest jobs report shows that the U.S. labor market is in decent shape, but Bank of America sees trouble looming in the distance. So we want to be aware and preparing for that. Bank of America, however, expects a non-farm payroll gains to turn negative this year during the first quarter of 2023, and the bank projects that the U.S. will be losing roughly 175,000 jobs per month. And folks, it's not just the labor markets that's going to be getting hit. According to experts, we're looking for a recession to begin in the first half of next year, according to Bank of America and their head of U.S. economics. And it says that the premise is a harder landing rather than a softer one. Now, this was released late last year. So the U.S. Federal Reserve has a dual mandate to ensure price stability and aim for maximum employment. And the first task has been a challenge. Prices have been anything but stable, and in June of 2022, U.S. Consumer Price Index saw its biggest 12-month increase in 40 years. While the headline CPI number has cooled off from its peak recently, December's inflation rate was 6.5% year over year, and it's still worryingly high. Now, the labor market, the Fed's second task, seems to be in much better shape. In December, the unemployment rate fell to 3.5%, a multi-decade low. Now, given this labor market strength and rampant inflation, the Fed is raising interest rates aggressively to bring price levels under control. The central bank increased its benchmark interest rate by 50 basis points in December, marking the 7th rate hike for the year. And Gaspin expects the Fed to remain hawkish, saying that we could see 6 months of weakness in the labor market. And folks, according to the Fed's latest projection, Federal Open Market Committee participants have a median forecast of 4.6% for the unemployment rate in 2023. However, Gaspin, on the other hand, sees the unemployment rate in the country rise to 5 to 5.5% this year. What do you guys think? Comment down below. Now, the prospect of negative job growth and a recession probably won't bode well for the stock market. And when the economy contracts, corporate profits usually deteriorate as well. Noting that, in fact, stocks have already been pummeled and the S&P 500 plunged 19.4% in 2022. Bank of America's head of U.S. equity and quantitative strategy, Savita Subramanian, recently said that the benchmark index is expensive and super crowded. And she says that the worst thing to hold is the S&P 500 wholesale. And this is according to what she told CNBC. Noting that Subramanian suggests that if you have a 10-year investment horizon, you can hold the S&P 500 and watch and wait. But if you're thinking about what's going to happen between now and, let's say, the next 12 months, I don't think the bottom is in. Subramanian sees opportunities in small cap stocks, energy, and healthcare. She also likes to select industrials, particularly automation plays. So folks, check this out. 5 REITs with the highest paying dividends. A lot of folks have been asking for more information on this, so here it is. Real estate investment trusts, REITs, have long been a popular investment option for those looking for steady income streams. And it says that these trusts are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends, making them a great choice for investors seeking regular cash flow. But not all REITs are created equal when it comes to dividends. Some REITs offer higher yields than others, making them potentially more attractive investments. Chimera Investment Corporation on the New York Stock Exchange, ticker symbol CIM, has a dividend yield of 16.45%, and Chimera Investment is a real estate investment trust that leverages mortgage assets with a portfolio that includes a mix of government-backed agency, residential mortgage-backed securities, non-agency RMBS, agency commercial mortgage-backed securities, and more. And the bulk of these investments are in properties located in California, and the company generates the majority of its income from interest payments on these assets. Meanwhile, Chimera's income is derived from the difference between the company's income on its assets and financing and hedging costs. The company has a diverse range of funding sources, including securitization, repurchase agreements, warehouse lines, and equity capital, which allows it to be nimble and take advantage of opportunities as they arise. Next on the list here is Annaly Capital Management Incorporated, New York Stock Exchange, ticker symbol NLY, with a dividend yield of 15.84%. Annaly Capital specializes in both residential and commercial real estate investments with a portfolio primarily made up of agency mortgage-backed securities and debentures. Its commercial unit, Annaly Commercial Real Estate Group, is also a major player in the market, investing in commercial mortgage loans and securities. The company generates revenue from the difference between interest earned on its assets and interest payments made on its borrowings. We've got New York Mortgage Trust Inc., NASDAQ, NYMT, with a dividend yield 13.13%. New York Mortgage Trust Inc. is a real estate investment trust that's in the business of acquiring, investing in, financing, and managing mortgage-related and residential housing-related assets. The company investment portfolio is diverse and includes structured multifamily property investments, distressed residential assets, second mortgages, and more. The trust primarily seeks to generate interest income from the assets or these assets, but also owns distressed financial assets that it hopes to turn into capital gains. In response to these challenges, the trust halted its asset purchases during the third quarter to enhance the safety of its balance sheet. While the results were disappointing, the trust is taking proactive steps to protect its assets and ensure that it continues to generate returns for its shareholders. We've also have Ellington Financial, which is EFC on the New York Stock Exchange, with a dividend yield of 13.12%. And Ellington Financial invests in a diverse array of assets. The company is focused on generating strong risk-adjusted returns for its shareholders by investing in a range of securities, including residential mortgage-backed securities, commercial real estate debt, and corporate equity. The company reported its third quarter results for the period ending September 30, 2022, recording $66.8 million in interest income, a 29.5% increase over the previous quarter. Annually adjusted earnings per share came in at 44 cents, and that was 3 cents higher than the previous year. The company's success can be attributed to its strategic investments in a variety of financial assets, including residential and commercial mortgages, consumer and corporate loans, and derivatives. Necessity Retail REIT Inc., NASDAQ, ticker symbol RTL, has a dividend yield of 13.11%, and Necessity Retail REIT Real Estate Investment Trust is a diversified portfolio of commercial properties focusing on net leased, single-tenant service retail properties in sectors including retail banking, restaurants, grocery stores, pharmacies, and gas stations. The company last reported revenues in September of 2022 of $116.2 million and a growth of 26.4%, driven by acquisitions of 69 properties last year and 93 properties during the first half of this year. The trust's properties were 92.6% leased at the end of the quarter, with a remaining weighted average lease term of 7 years. And despite a 6% fall in AFFO, which is adjusted funds from operations, to $34.1 million, the trust continues to forecast AFFO shares of $1.02 for fiscal year 2022 based on the trust's current leasing profile. Now, another interesting investment opportunity here is knowing who actually makes the tanks that the U.S. is sending to the Ukraine. So check this out. It says here that as the Ukraine-Russia war continues, the U.S. has decided to send 31 advanced Abrams tanks to Ukraine. The military staple comes from American aerospace and defense giant General Dynamics, which reported slightly better sales and earnings than expected on Wednesday morning. The Wall Street Journal reported Tuesday that the Biden administration was poised to send a significant number of Abrams M1 tanks to Ukraine, adding to the cash, missile launchers, munitions, and other equipment the U.S. has made available. The decision to supply tanks came down on Wednesday, noting that an Abrams tank weighs about 60 tons and is powered by a 1,500 horsepower gas turbine engine, and the cannon has a diameter of almost 5 inches. General Dynamics reports Abrams sales in its combat systems segment, which generated about $7.3 billion in sales in 2022, which was flat with 2021 sales. Total sales at the company in 2022 hit $39.4 billion, up from $38.5 billion in 2021. The company has also provided munitions for the Ukraine war effort, and shares were up in the pre-market trading but are now down 3% in midday trading at the time of this article being released. The S&P 500 and Dow Jones Industrial Average are off 0.5% and 0.3% respectively. While part of the early gain in the stock might have the tank, it was more likely because of solid fourth quarter earnings, and General Dynamics said it earned $3.58 a share from sales of $10.9 billion, and Wall Street was looking for $3.54 a share from $10.7 billion in sales. Orders in the company's aerospace division, which makes Gulfstream business jets, exceeded sales by about 20%. And aerospace and marine systems operation, which makes submarines, are the company's largest business segments. The company ended the year in good shape, particularly with regards to its bookings, according to Vertical Research Partners analyst Rob Stallard. The aerospace division has yet to see bizjet demand slow down and ended 2022 with a backlog of $19.5 billion, which is more than 2 times its 2022 revenues. He rates shares buy and has a $300 price target for the stock. Shares closed Tuesday at $235.45. Overall, 67% of analysts covering General Dynamics rate shares buy. The average buy rating ratio for stocks in the S&P 500 is about 58%, and the average analyst price target is about $278 a share. Other things might be moving the stock, but the tank did come up on the company's conference call, with CEO Phoebe Novakovic assuring investors that her company can meet increasing demand for the Abrams. Folks, this debt limit ceiling crisis could hit your 401k, Social Security, and Medicare, so please pay close attention. And it says also here, a lot of questions are being asked about how much retirement income do I need to live comfortably. Saving for retirement is perhaps the most major financial goal every American has, but once you retire, you'll need an adequate income to replace what you were making pre-retirement. As you might imagine, this number will vary from person to person since we all have different lifestyle plans for retirement. While Social Security will help quite a bit, it won't get you entirely through retirement. That's why retirement income planning and having a goal number in mind is so important. And it says here that the rules for what makes a viable retirement income vary from expert to expert. Is that, however, the vast majority of them recommend something around 75 to 80% of your pre-retirement income. This can include all sources, such as 401ks, IRAs, Social Security, part-time jobs, and more. So here we are, the debt limit. Folks, debt limit ceiling crisis could hit your 401k, Social Security, and Medicare. Very important stuff here. America's debt ceiling was reached again on January 19th, 2023, as the country exceeded its $31.4 trillion spending cap. The cap was raised to that amount in December of 2021, and as much terms like ceiling and cap are used in this discussion, the truth is this limitation is more of a temporary hindrance than a cutoff. And the cap has been raised an astonishing 78 times since 1960. While this may seem like a topic outside of your realm of concerns, the long-standing effects of not having this ceiling raised again have a strong potential to bleed over into your personal finances, namely your 401k, Social Security, and Medicare. So it says here that the national debt ceiling is the legal limit on the amount of debt that the U.S. government can incur, and this limit is set by Congress and is intended to ensure that the government does not spend more money than it takes in. However, when the government reaches the debt ceiling, it can no longer borrow money needed to run the government, okay? So raising the debt ceiling isn't a swift single-step process. It requires a series of steps through multiple parties, and in recent years it has been contentious. The full process looks like this. We're starting off with the Treasury Department forecasts when the government will reach the debt ceiling and notifies Congress, and then the president submits a request to Congress to raise the debt ceiling. The House of Representatives and the Senate hold hearings to discuss the need to raise the debt ceiling and potential alternatives, while both chambers of Congress vote on a bill to raise the debt ceiling. And step number 5 is if the bill passes both chambers, it is sent to the president for signatures. At that point, step 6 is if the president signs the bill, the debt ceiling is raised, and ultimately it's up to the president and Congress to agree on lifting the ceiling, and ultimately by how much. Now, time is a factor, though. If negotiations carry out too long, the U.S. can default on its debt, yielding repercussions throughout the economy and government programs. So the impact on 401ks is a direct one, since the value of a 401k relies on the success of the stock market. If the government is unable to raise the debt ceiling, it may default on its debt obligations, which can lead to a loss of confidence in the U.S. economy. This is in turn can cause the stock market to drop, leading to a decrease in the value of 401ks. As a result, a default on debt obligations could lead to long-term effects on 401ks, as investors may be less likely to invest in the stock market in the future. Social Security and Medicare are also at risk if the debt ceiling is not raised, and these programs are funded by the government. And if it is unable to borrow money, it may have to cut spending on these programs, and this could lead to reduced benefits for recipients of Social Security and Medicare. Now, this could lead to reduced benefits for recipients of Social Security and Medicare. Now, this could have a significant impact on seniors and those who rely on these programs for their livelihood. Meanwhile, keep in mind the debt ceiling does not affect the amount of debt the government incurs. It only limits the government's ability to borrow more money to finance existing debt. How'd you like that? Be able to finance your existing debt. Meanwhile, the government can still spend money on programs such as Social Security and Medicare, even if the debt ceiling is not raised. However, if the government is unable to borrow money to finance its existing debt, it may have to cut spending on these programs in order to meet its financial obligations. While it benefits no one to see the U.S. default on its existing debt, the fact still stands that issues such as the debt ceiling are commonly used as political bargaining chips, which only further complicates the proceedings. The U.S. Treasury has since stepped in to institute necessary measures to buy Congress a few months to carry out negotiations. However, close calls are never settling, and amid real implications for Americans' retirement accounts and entitlement programs, it brings up many concerns as to how dependent Americans are on government debt to supplement their retirement. So folks, here's some tips on handling your retirement. If you're finding yourself in this situation, number 1, avoid concerns such as Social Security insolvency and absent Medicare benefits, as Americans need to prepare for retirement through proactive measures. A financial advisor is a wise choice when putting a strategy in place that will give you a plan of action for your financial future after your working years are past. It says here that finding a financial advisor doesn't have to be hard, and there are free tools out there to set you up with matches with vetted financial advisors who serve in your area. And you can interview your advisor matches at no cost or before you decide which one is right for you. And if you're ready to find an advisor who can help you achieve your financial goals, then get started now. Folks, I will be including links for free. Anyone can access these on my Patreon. You can find it at patreon.com/Kevin247. Free links for financial information, retirement tips, investing tips, as well as a variety of other side hustle and passive income generating ideas. I appreciate you guys watching. Please give this video a like, subscribe to the channel, share with anyone you think it would be beneficial to, and I'll see you guys on the next one. Take care. Bye.